Welcome to today's webinar, compiled and produced by the team at biznews.com. All of our webinars are interactive. We encourage you to pose questions to our guests. The more challenging, the better. And the earlier you get the questions in, the better the chance of having them answered. The recording of this webinar will be available later today on the biznews.com channel on YouTube. Well, it's a warm welcome to you from Johannesburg, where my colleague, usually based in Cape Town, Stuart Lohman, is with us. Stu, nice to have you up here with us, and you're in the little new studio. So we've actually come a little way, haven't we?
Come a long way, Alec, from the JSE days. What, almost nine years soon, huh?
Yeah, it really is. We'll be celebrating our 9th birthday on the 5th of August. So I hope that everybody who's watching this will actually participate in our birthday celebrations. But today, well, it's a celebration of a different sort. We are adding to the portfolio 2 new stocks. It comes out of what I learned in Davos. It was almost 3. I was very keen on Thungela Resources, but it's been a 10-bagger since it was listed on the JSE just over a year ago. So I remember at the time we said this was a good stock to buy, and unfortunately our portfolio doesn't really lend itself to commodity shares. We invest in human potential, really. But I hope that those of you who did buy Thungela when it listed on the JSE are enjoying your ride. You don't have to sell it now, that's for sure. But there's a heck of a lot that we're going to go through. Before we get there, though, Stuart will just bring us up to date with the tech, as always. Stuart?
Thanks, Alec. Those listening, if you can hear my voice and see Alec and myself on screen with the little presentation, the first page of Alec's presentation below us, can you just give us a high five, please? There's a high five on the control panel. Excellent stuff. I see them coming through, Alec. That's good to see. And also, we do like to keep it conversational. I do like to bump into Alec's conversation every now and again, his presentation, but there's a little question mark on that same control panel. If you put your questions, I see we've got a few comments already on that panel. I'll pass them through to Alec as we get through, but all yours, Alec.
Super. Right. So the idea of this is to be interactive, and so that we can talk through the logic in investing in this portfolio. You are really following your own advice. My idea here is to give you a model, and from that model, do your own research. After you've done your own research, you can make your decisions on whether or not to follow this portfolio. It's a model portfolio. It's not a real portfolio. So it's really up to you to decide how you want to play it. Some of the shares you might like, some of the shares you might not like, the structure you might not like. There's also a very real portfolio, which is the shift portfolio. So here we have 2. We have the one that's been going for, sure, as you can see there, 7 years and 5 months. That is the web trader portfolio. That's the one that's in fact got an Australian share in it, an Australian stock, and then the other stocks are from, and some South African stock, and then some from NASDAQ and the New York Stock Exchange. So that's what web trader offers. It offers the whole world. And then there is a shift portfolio, which was launched in December, about the worst possible time, which is an exponential portfolio. And that one is available on the shift platform, and that's where I put my own money in there. So you know that I'm the one also feeling quite a lot of pain from investing in that shift portfolio. But remembering that the shift portfolio is a 5-year play, the web trader portfolio is indefinite. The web trader is a bit like Warren Buffett, who says you buy shares forever, your holding period forever, whereas the shift portfolio, my suggestion is you hold it for at least 5 years. So that's a little bit by way of background. Let's get straight into it. And here we go. So the past month, you can see there, it was a bad month for purple, but not surprisingly, because that had held up extremely well during the sell-off in Exponential shares internationally, and it is an exponential company, and also a good month for Wilson Bailey, which we've taken advantage of now after that. Remember the wipeout that came with Wilson Bailey through the unexpected liquidation of its Australian operation, which was more than half the company in terms of revenues. And this coming only a few months after the Australian government blocked a bid from a Chinese buyer for the Australian construction arm of Wilson Bailey. So they got hit both ways. They got hit by the Aussie government saying that it was too strategic a company to sell to the Chinese, and then, hey, presto, not much longer, that very strategic company actually went bankrupt. So unfortunately, those are the things that happen when you invest in shares. Shares are not guarantees. The only guarantee is that you are going to receive a better return over a longer period because you take a higher risk. Also, doing a little better in this month, you can see with Spotify. Avenge has been bumping along pretty similar to the share price it was at. And for the rest of them, Amazon actually went down a little, which we're not too unhappy about, because we can, those of you who missed out on the last purchase of Amazon, can actually buy into it now. And the rest of them, just a small decline. These are almost the kind of declines that you could have even seen in one day, as the international markets are now finally starting to stabilize after getting hammered really hammered in April and in February. And the bounce back in March, presumably, is very long forgotten by now. Anyway, so that's what happened to the constituents in the web trader portfolio. The Rand also played its part. If you recall, a lot of the losses that we saw in this portfolio during the month of April were offset by the Rand depreciation. And you can see that very clearly, that in April, the Rand started around 1460, and then it lost all the way up to 16 Rand against the US dollar. Well, that's stabilized now. We're back to about, as you can see, 15.5. So the Rand is now, in this instance, in these portfolios, is actually making the performance worse. So the portfolio was down 4% in US dollars, but 7% in Rands. Still, compared with the kind of volatility that we've seen recently, this is almost kind of stable in comparison. We've also seen this as a good opportunity to increase the weighting of US dollar stocks, and I'll get into that in a moment. Here's the highlights, vital statistics. The Rand's value is at 8.5 million Rand now, after starting at 2.2 million Rand in 2014. And as far as US dollars, it's gone from 200,000 to 547,000. It again showing you the value of a long-term strategy on a portfolio. Let's get into the changes, because this is really the interesting part of it. We've decided to sell the Wilson Bailey holding. The problem with Wilson Bailey is that we've been really badly disappointed by the stock. It happens. You get the COVID attack. You get the Australian government's decision on Wilson Bailey's Aussie operation. And then because of COVID, the Aussie operation goes into liquidation. So there's you really have to look at this company and say, well, how is it going to turn around? Where's the upturn going to come from? And in its case, the upturn has to come from a growth in South African construction, or investment in construction. And with confidence in South Africa so low, there's not too many people who are putting money into buildings at the moment, which is where Wilson Bailey gets a lot of its income from. Similarly with roads, with all the chaos that's been around Sanrail, after the Gauteng highways, which were supposed to have been paid for through toll roads, and as we well know, that hasn't happened because of many reasons, and Outer will explain that why it was camped against that so strongly. But the reality is that it isn't a happy place for a construction company, even the blue chip of construction companies in South Africa, to be. And Wilson Bailey, as a consequence of that, the future doesn't, there's nothing that really jumps out at you to say that this is a stock you've got to own today at 80 Rand a share. So we are looking at a better opportunity that's being sold. And finally, I've given up on 2U. I know that it's only 1% of the portfolio, and it's a fabulous business. It's the market leader in education, but it's one of those that just seems to be finding some difficulty all the time. If you own 2U shares and you're prepared to take a very long-term bet on it, then there's no reason why you should also sell. However, if you need the cash, as we need in this case, to buy better looking opportunities, then it's really cleaning up the portfolio and selling that 1% holding of the total portfolio in 2U. Cash that was raised from the sales of 27,000. Remember, the way we work in our purchases is that we buy 1/3, 1/3, 1/3. So the first 1/3 of these two stocks, Palantir and Meta, has been acquired in this in this month. We'll be buying another $13,500 worth of each of those shares next month, and then finally in the following month we'll get another $13,500 shares. As things stand right now, it's quite clear where we will be disposing. We're not going to be disposing of Avenge. I think Avenge is a stock that's done. In fact, I should go to the portfolio. There it is. There, Avenge is a stock that has been probably not properly recognized, I think, by the market. Investors didn't like the last set of results, but Avenge does have a very strong mining arm, African mining arm, and that's likely to bring home the bacon, and it's not fully reflective in the share price as we're seeing it. The one that could very easily be dropped out next time is Netflix, and Spotify, I'm afraid, is in the same category as well. So Netflix and Spotify, two very, very poorly performing stocks. We didn't sell Netflix when it tumbled all the way down, significantly lower than the current share price. It's stabilized now, and now at $195. We are likely to trim that holding or erase that holding in the next month. And similarly with Spotify, because if you have a look at Palantir and Meta platforms, certainly in my reading of it, they have far greater potential. Okay, let me get back to the reasons for Palantir to start off with. So this comes directly out of the World Economic Forum in Davos. I had the opportunity there to shake his hand. I can't really say that I meet and greeted with Alec Hogg, the chief executive of Palantir, but he really is an impressive guy. I did a lot of research before going. I did actually request an interview with him, which was not granted, but such is life. But I did go along to a session where he was interviewed at some length by a journalist from Germany. And the reason why I think they selected a journalist from Germany is because Alec Hogg did his I think it was his PhD in Germany. What he established Palantir together with Peter Thiel, who you recall, I think, as the co-founder of PayPal with Elon Musk. It was both of them got going on PayPal. Peter Thiel has become very active in the political side. He supports right-wing candidates in the United States. Interestingly enough, Alec Hogg, who's his partner in Palantir and the CEO of Palantir, describes himself as being on the left wing. So you have these two individuals, but super smart. When you read the IPO documents of Palantir before it listed in September 2020, you'll get a good understanding of the feeling that this is a company that actually places bets. It places bets on democracy. It places bets on the United States. It serves democratic countries, and what it does is it gathers data and mines that data and helps in its mind to keep the world safer. Now it has the US government is its biggest client, but it has many other clients as well. People increasingly they're selling products into the private sector. What I liked about the business is the software that it develops, and it's very much it's a software development business focused on data. Data is a huge area of expansion and growth for any company into the future. And it's one of those products that if you're a big company, if you're a corporate and you want to use big data, Palantir really is in a league of its own. It's a little bit like what Amazon did with Amazon Web Services. It was ahead of the field there on the cloud. Jeff Bezos took a bet on the cloud probably 5 years before anybody else woke up to it. And he, as a consequence, Amazon Web Services has been a massive success. Palantir is a very similar story when it comes to big data. Its software is way ahead of the competition, and to produce its software products, and it's got 5 different products, it takes something like 5 to 7 years in production, and then it's rolling it out. And so many of those products are now being rolled out, and you're seeing this company grow revenues at 50% plus per annum. It listed in September 2020 at $10 a share. We brought it into the portfolio at under $9 a share. So it's, and you can see in this graph, it's gone over, to nearly $40 a share. So you are getting it at a low level. It was built for a dangerous world. We have a dangerous world right now. Palantir is supporting the Ukrainians against the Russians. It's helped Ukraine in a lot of instances in defending its country by using data which it crunches, which its software crunches, and it's a business that, as the world becomes more and more dangerous and as things change, it's a business that is likely to get a whole lot more momentum behind it. I have a former analyst who now lives in Europe, who's been talking to me at length about various companies. And this is a company that he's been recommending for a while now, for many, many months. And I just didn't understand it. I hadn't had the opportunity to take the time to go and learn about Palantir, which is fortunate, because had I done so earlier, I'd probably have brought it into the portfolio there between $20 and $25. Well, sometimes the procrastination actually works in your favor. At this kind of level at 885, as you can see on that share price graph, it's exactly the same company that it was at $22, and yet the revenues are significantly higher than it was a year ago, and likely into the future. When I listened to the CEO, Alec Hogg, he's a no-nonsense kind of guy. He is quite controversial because he speaks his mind. And I like this kind of a CEO. I love a CEO that knows what they're about. They knows what their company's about. Not prepared to allow fashion and political correctness and the need to get onto the front pages of whatever magazines are still left to influence them. They are influenced just by what is good business, and they're doing good business, these guys. So that's Palantir. The second one is Meta. I got an education in the virtual reality world, or the metaverse, as it's called, from Chris Cox, who's the chief technology officer at what used to be called Facebook, the group, and Nick Clegg, who used to be the deputy prime minister in the UK. You might remember he led the Social Democrats into a coalition with the Conservative government. Clegg left politics to join Meta and to become their global spokesman, effectively. He's got other fancy titles in his portfolio, but he's the guy who interprets for the rest of us what they're up to. Facebook, you will recall, I was uncomfortable about them, especially after the whole Analytica problems that happened round about in 2018. In fact, we sold out of the company and was quite criticized by some people of saying, but hang on, you sold at $200 and it went up to over $300, nearly $400. So was it a mistake? Well, probably was, but at the time, I was very concerned about Facebook's business model. They didn't seem, they've got their own WhatsApp, their own Instagram, their own Facebook itself, but Facebook, the platform, was coming under pressure from all kinds of different forces. Similarly with with Instagram, but at the same time, WhatsApp was just growing like topsy. So now this company owns WhatsApp, and it's also bet heavily on a new world, on the metaverse, to the degree that it's even changed its name to better reflect that. At the World Economic Forum, I got to spend, there were 4 of us who got to spend about 45 minutes with Cox and Clegg, and threw a lot of questions at them. I've got that recording, which I'm going to be putting up onto BizNews in the next few days. I've only been back for a day, arrived on Sunday evening, so only for a little while. So I haven't had a chance to get around to doing all of that stuff yet. But I was very impressed. I went for a visit into the metaverse with the headsets, to the degree that we've acquired headsets here, and we'll be starting to understand it better. What impressed me about what Meta are doing is that the software, if you can imagine, those of you who don't know anything about virtual reality and the metaverse, and it's not surprising because it's described, it was described to me as the very early days of the internet. If you remember when there were dial-ups, and it made a terrible noise when you connected to the internet. It was terribly slow. It, however, was something brand new, so you were prepared to put up with those kind of disadvantages. With Moore's law coming into play, that has improved to the degree that we now know in some parts of the world, 100 meg downloads are actually standard. Even here in South Africa, we can get that kind of a download through fiber very easily. I think here in the office, we've got something like 200 megabit downloads. So, and that's only a few years on. The internet is unrecognizable from where it was back in the late 1990s. The metaverse, or virtual reality, is the internet of the 1990s. And already I can see business applications. It's one thing when gamers can go in there, and of course that's already a huge market potential. And we know that Microsoft paid billions, I think it was over $60 billion for Activision, which is a gamer, because of the opportunities in the metaverse. But when business actually starts grabbing the virtual reality carrot, it is going to transform the metaverse itself. And we've already got Microsoft in the portfolio. Meta is having a huge play on the metaverse. And if you could have gone back 25 years and bought into an internet company, then you might have bought Amazon at a fraction of the current price. So that's really what my thinking is here. It is realigned for the new world. They've got WhatsApp, which is heavily discounted. There's 2 billion calls a day. I mean, just think of that. 2 billion people around the world use WhatsApp every day. It's everywhere. And the business application of that is quite simple. It's quite clear. When you've got that kind of a market size, my goodness, you can turn that into, well, who knows? It's gold. So Meta is a phenomenal business. It's been discounted because of, I suppose, reputational issues to a degree. It's stabilized those now. Worries that Facebook itself is not going to be continuing to grow can be easily offset by the area of growth for this company is going to be the metaverse. And as I said earlier, they even changed their name to reflect it. So those are the two that we're bringing in. Remember, we do the 1/3, 1/3, 1/3. So we bought 1/3 of the eventual stake in each of them. They're going to end up at about 7.5% each. And we have a portfolio which looks a little bit like this. They're both sitting at about 2% at the moment. The one purchased at $195, and the other one at $8.85. Okay, onto the shift portfolio. And this you can...
sorry, just on this,
yeah,
I've got a few questions, if we can, please. Sorry. Just on Palantir, there's a few. Paul wants to know, with it being so low, is it not worth going all in all at once on this one?
Sure. Paul, that's your call. Go and read the IPO. I read the IPO document, which it's quite phenomenal. And then I've watched a number of the quarterly, in fact, the very first quarterly video, Alex Hogg is in it and ran the whole thing. And you get a feeling of the guy. You could actually also go onto the World Economic Forum website and pick up the Alex Karp interview, which I thought was very instructive as well. He doesn't suffer fools, as you'll see. Then there was the most recent quarter. The quarterly report was just audio, so not video. I think the reason they gave was they were in London. And Alex Karp came on and just gave an overview. And then he left the rest to his executive team to actually answer the questions. So you've got an inspiring leader here. My worry about going all in with anything is that you just don't know. We keep a close eye on Apple, and you can see 28% of the portfolio, and on Amazon. And I love those two companies. I know them quite well. We've lived with them, as you can see, from 2014, Amazon, and from 2015 for Apple. We over such a long period of time, when you're reading all the reports and watching the quarterly investment feedbacks to the investor community, you really get to understand the business well. And that's what share investing is about. You're a co-owner of the business. I love Palantir, and from what I've seen, it's very difficult to find a counter to it, especially at these kind of share price levels. But to go all in, it's not a portfolio style, I'm afraid. But this is just a guide for you. Your decision is the one that you should take.
Just Daniel's also on Palantir. He just wants to know, when is it likely to turn profitable? And do you think that milestone might be the case for the turnaround in the stock?
Well, he was asked this. Alex Karp was asked this, and he said, you know, he's not a great fan of GARP, the accountants, and the accountants do confuse issues with the various bits and pieces. He says if we were a lemonade stand, then we would have made $420 million last year. So take that from whence it comes. Or in other words, free cash flow is what you should be concentrating on. So if you're going to write back the depreciation and other non-cash items, which is what the accountants say you must because of accounting conventions, then it isn't profitable. But if you look at it on a free cash flow basis and the basis that Karp is talking about, he also uses stock allocations as a incentive tool, and with accounting conventions, when you use that then becomes part of your costs as well. So, which of course it is, because it's part of the equity, but it's not big. It's relatively small. It was big in the past. It's not so big anymore. It's a complex company. It's a company that takes a bit of understanding. As I said before, I wasn't able to feel confident enough to invest in it until what I saw at the World Economic Forum. So, but I've got to go with what Karp says, that if you were to take everything else out of the picture and treat it like a lemonade stand, it's already making $400 million a year and growing. It's going in the right direction anyway. There's no doubt about that, whichever accounting you want to believe.
Thanks, Alec. Elon just wants to know, if entering now or starting now, would you still buy Apple, Amazon, and Microsoft?
Yes, I would. Most definitely. I mean, you've got to be worried because, in a way, I suppose, because they haven't really adjusted to, or as much as the wild cards have adjusted to the sell-off in the markets. But they are our bankers. They are great companies. These businesses are investing in R&D massively, billions. They've got thousands and thousands of people, very, very smart people who are working in their research and development areas. And one of the benefits, in fact, the Wall Street Journal wrote a piece about this in the past week. One of the benefits of the meltdown in smaller tech stocks has been that the talent is now, which was very hard to find in a big company like Apple or Amazon or Microsoft, is now coming back in. And they're always busy with new things. I had a look in London. I couldn't quite believe it, but we all know Apple stores. But in London, Microsoft is now creating Microsoft stores, where it's offering similar products to what Apple's offering in its retail outlets. And that's a big, big opportunity for Microsoft. For Amazon, they're now looking at hundreds already of Amazon Go stores, where these are primarily grocery stores where you walk in, you pack your groceries into your bag, and you walk out. And you don't go through a teller, a cashier. How do you do that? You log in when you go in, and the sensors in the store pick up what you put into your basket and then charge your Amazon or whatever card you've got linked to your Amazon account when you leave. Now, this is like science fiction for us here in South Africa, but it is science truth in the US and in the UK. And there are literally hundreds and hundreds of these stores that already exist with thousands in prospect. So that's what happens when you've got an advantage on research and development. And we're in a world where big data is being used to break down barriers. One of the areas that I went to at the World Economic Forum, one of the sessions, which was just fascinating. They had the CEO of Sandbox, which is a spin out from Alphabet, the holding company of Google, was on quantum computing. And quantum computing is going to make many of the mysteries that we have, and there are many of them in the world. For instance, how do whales and birds know where to fly? Or how do they understand geography better than we do? We just can't get there at the moment. It's an impossible question for us. But with quantum computing, it's going to be answerable, very answerable. So there are these advancements, and quantum computing is only about 5 years away from the time when it's a reality in our lives. Who's going to be the beneficiary of quantum computing? It's not going to be the old world economy companies. It's going to be the Apples, Amazons, and Microsofts. So this is a bet on a transforming world, and having a big stake in those, a big part of your portfolio invested in those companies still makes as much sense as it ever did.
Thanks, Alex. Just one more before you get to the shift portfolio. On the Meta purchase, Jared just wants to know, BL has been around for quite a while. In what way will it become more attractive or useful?
Well, the pricing. The pricing is now coming into, on the one hand, the headsets are getting better. It's Moore's Law. Let me just spend a little bit of time on that. Moore's Law says that every year you get double the capacity of what you had a year ago at the same price. And we've seen how this has transformed the whole equation on renewable energy and computers, which when the first computers that came out were huge and expensive. Now you can get in your hand far more computing power than NASA had to put a man on the moon in the 60s. And that's what Moore's Law does. As human ingenuity is unleashed, things get cheaper and more powerful. And that's exactly what's happening with virtual reality. It has been around for a while, but it's been the preserve of a very small little group, because on the one hand, it's been expensive, the headsets, and they are coming down in price all the time. And on the other hand, the software that was created for the market the market wasn't big enough to attract the best software engineers to that field. So it would be enthusiasts, and as you get more and more coders who are going into that area, you get better and better product, which is accessible, which then has a bit of a virtuous circle. Think about it. Up until now, why would a business want to invest in headsets for its staff? Well, the product that Meta has put together called, I think it's called Workplace or Workspace. I need to go in and actually download the software. But the product that it's developed is specifically for business meetings. And when you have a business meeting in virtual reality, it is exponentially better than a business meeting on Zoom. I suppose we should be careful about keeping Zoom in our portfolio, but that's all down the road. The idea is, if you can invest in a new technology when it's in its nascent state, and you're prepared to be a long-term investor, in years to come, you'll turn back and say, that was a smart decision that we made at that point.
Thanks, Alec.
Okay, so let's get into the Shift portfolio. And just to remind you, we bought into Shift Our first block was in December last year, which is about the worst timing you could possibly have had to buy into exponential shares. And what what has happened here is predictable. It's quite interesting though to see that the bankers in the portfolio, two of them have done okay. They've done fine. Apple and Microsoft. We've had Netflix, which was one of our three bankers, which has been a complete wipeout. Netflix surprised even Netflix with the bad numbers that came out in the first quarter of this year. The previous quarter, they were already looking a little bit dodgy, but Netflix was predicting that that would have been just a temporary blip. Well, it turned out not to be a temporary blip. The share price is down 59%, as you can see there, from our staggered purchases over the 3 months that we bought into it. But such has been its underperformance in this portfolio that it's gone from around 15% to just 7% of the portfolio, and it's cost us heavily. The overall value of this portfolio from $30,000 is to $23,500 at the moment, and it's a loss of around 20%. It's partly due to the wild cards that we put in there, which pretty much all of them have been poor performance, and partly due to the Bitcoin, where we put a small percentage of the portfolio into Bitcoin. We were looking to add maybe up to 10% of the portfolio. The idea of Bitcoin, according to the smartest investment analysts, is that you've got to have some of it in there. You've got to have some cryptocurrency in there. So we went for the ETF, the Bitcoin ETF, which is down 37%, and we went for MicroStrategy, which is the company that owns a huge chunk of Bitcoins. In fact, the value of its Bitcoins is significantly higher than the total market cap of the company. So that was the idea, was that that would give you your holding, your Bitcoin holding, and or your cryptocurrency holding. And as you can see, it's been a radical underperformer. Something that has offset the decline in this portfolio has been the fact that we sold Twitter at $49 a share last month. So that's helped a little bit, but it's really not. It's a bit of blowing against the wind when you have a look at the other declines. I was very tempted when I see Cloudflare down at $58, $59 to add to that holding, but at the moment the idea is that when we find new opportunities in this portfolio, then we lighten the ETF, the exchange traded fund, which we have in the NASDAQ 100. And as you can see, between the ETF and the two remaining bankers, which is Apple and Microsoft, we've got over 60% of the portfolio in those three counters. So it's helped quite a bit to offset the massive losses that we've seen in some of the more speculative stocks, the wild cards, and of course in Netflix itself. But when I look at this portfolio, I really like the look of Cloudflare, and then of course we are adding to it today with those other two. So here's what we've done. We've sold 8 Invesco QQQs because we're going to be putting about 7.5% each into the two shares, Palantir and Meta. And by selling 1/3 of the Invesco holding, that is where the investments have been made. And you can then see here's the final numbers, and that shows you. Sorry, we're putting 15%. We're making Palantir and Meta bankers in this portfolio. They're going to be new bankers because we've lost Netflix as a banker. We can't buy Amazon as another banker, and the reason for that is that Amazon's share split hasn't come out yet. So with Shift, you can only buy one Amazon share at a time. And if we were to buy another Amazon share here, it would take us to 20% of the portfolio, and that's not intended. We're going to get that at 15%, keep it at 15%. So next month, after the share split has happened, we'll be adding another 5% into Amazon, and then Palantir and Meta in time will be adding to them to get them to 15% each. So it's really shifting away from the wild cards who haven't performed, as you can well see. Don't have to tell you that. But to leave a little bit in Bitcoin as we've got there. We started on Bitcoin. We said, "Oh, in cryptos, just hang on a minute. It's really getting a heck of a lot of gale force winds from the front." So we'll hang back on that, and we'll then reassess every once we've allocated the Invesco or the exchange traded fund amount into Palantir and Meta, and then of course a little bit more that goes into Amazon. We'll do that next month. But the whole staggered purchase approach is one that certainly will help us here. And that, Stu, is the end of the formal part of the presentation. So I'm sure we can take a few more questions.
Thanks, Alec. As Serena says, just on MicroStrategy, she said she was in a session with Garth McKenzie. You mentioned it's underwater at the moment, and there's a margin call at $21,000 on the price of Bitcoin. Just mentions it to be careful. I'm not sure if you have any idea on that.
Bitcoin's trading at $31,000 at the moment. So that doesn't quite make sense. If there's a margin call at $21,000 on Bitcoin, suppose people are nervous that it's going to go to $21,000 and then MicroStrategy would be no more. Well, if that's the case, then Bitcoin's no more as well, I guess. But Garth McKenzie's a clever guy, so listen to what he has to say. The only reason we put MicroStrategy in there, and as you can see, it's a very small part of this portfolio, is because at the time, and even now, it is trading at a significant discount to its holding of Bitcoin. But I'm sure Garth has done his homework, so I certainly would suggest that you pays your money, you takes your chances. In this portfolio, we got 1% in MicroStrategy, and I'm comfortable at that level.
Thanks, Alec. Paul just has a nice comment. He says, "You really enjoyed your boardroom talk this morning." He says, "Wokeness tends to make us lose sight of our North Star," which is what you mentioned. I suppose the WEF stuff also brings that back.
Yeah, thanks. Thanks, Stu, and thanks, Paul. The one thing that came through strongly at the WEF was that we're all idealists, and sometimes the idealists get the foghorns to be able to make the loudest noise, and hence the wokies have enjoyed a disproportionate amount of media and indeed societal coverage over the past few years. But the reality about all of this is that we do live in a real world. And if you are offended, I love this commentary that somebody gave recently, is to say that when somebody looks at you strangely or says something that you don't like, that offends your senses, you should compare that by you being offended by that action with when you're in your village and a Russian tank rolls in. And it really is the invasion of Ukraine kind of woke up a lot of people, no pun intended. And at the World Economic Forum, you saw this as well, that the reality of the world. Palantir is a stock that should have shot the lights out, should have surged after the invasion of Ukraine. But such has been the anti-propaganda or if you like, the woke-driven narrative against this company, that in fact it went down. Well, that's fine. If you see through the idealistic and well-intentioned idiots with the commentary that is often very, very superficial, and you do your homework and you understand the reality of what's happening on the ground, then you can make a different decision. Here in South Africa, we've got a very good example where the two best performing companies in the country are Transaction Capital and Capitec. When you go back over the last 5-10 years and have a look at the coverage, the media coverage on these two companies and what they do, and the way that they've been lambasted for supposedly not being kind to society or not being kind to people, you will see that by doing good business rather than bending over backwards to get your publicity right, it's actually a far better approach to the world, and certainly is much more sustainable for shareholders. So thanks, Paul. I'm glad you enjoyed today's boardroom talk.
Just a follow-up from Paul. He says, Alec, would you please share your Excel spreadsheets for the portfolios with your premium subscribers?
Oh, that's easy enough to do, Stu.
Yeah.
We can do that, yeah. Yeah, for sure. Good idea. We'll give you, sorry, it should be easy enough to do. I'll ask Stuart to do it.
Perfect. I think we can just add it to your next premium newsletter, Alex, somehow. It should be easy enough.
Okay.
Dave just says, why are you not selling? If you were only to buy, oh, sorry, Dave. Oh, sorry, Alec, I got mixed up there. If you were only to buy one of Palantir or Meta, which one would you buy?
Palantir.
Cool.
I love Meta as well, but I would only buy Palantir if I had to.
Andrew asks, Cloudflare as of today has a current price of $0 on the Shift app, yet he has 3 shares. He's not sure if this is a Shift. I don't think we can unfortunately answer that.
I got the same panic this morning when I had a look, just ahead of putting this portfolio together. There's something wrong with the Shift app. We must let Arno know, and I'm sure you'll be terribly embarrassed by it. I'm just having a look here on my iPad. According to Nasdaq, it's trading. It was up 5% yesterday at $58.91. That's the net flare price. So it's not zero, but I did have a look as well, just in case. In case, maybe it had been suspended, maybe the Russians had bombed it. Who knows? But it did come. It's a problem in the system.
Mark asks, why are you not selling to you in the Shift portfolio as you have done so in the Web Trader portfolio?
It's a good company. It's really a good company, and it's the leader in education. The reason I sold it out of the Web Trader portfolio was that it was 1% of the portfolio, and we needed to raise a little bit of money. So to make the purchases of Palantir and Meta. Would I buy it instead of Palantir or Meta? No. Would I sell it in the Shift portfolio? No. It's a good company. These are good businesses. These are good operations. I'm very happy to be a co-owner there, but it was pretty irrelevant had become pretty irrelevant in the Web Trader portfolio. So it was just a practical decision.
Thanks. I suppose you've also got to allocate your resources depending on both portfolios, because I suppose they're different values, etc. So that would also play a role.
Yeah, definitely. Well, it's 4% in here. I'm happy with 2U. It's everything about the, and look at that. Actually, you think about it, it's done a heck of a lot better than all the other wild cards. It's the best of our wild cards in this portfolio, which is okay. So if we should be selling stocks on the basis of short-term price performance, we'd be selling Cloudflare, and I can promise you that's the last stock I'd be selling. Or maybe MicroStrategy, now that Garth McKenzie's actually explained the reason why people are falling. But if there's a margin call at $21,000 on Bitcoin and it's sitting at 31,000 and rising, I guess it depends on if you've done your research on Bitcoin and what you think about Bitcoin. I'm of the opinion that there's a huge future for digital currencies, and Bitcoin being the leading one of them. But there are critics who say that those of us who think that Bitcoin can be a store of value are smoking something very strong, and that's what makes a market.
Yeah. Sean, just you mentioned Microsoft's acquisition of Activision earlier. Sean just wants to know what's your view on that, Alec?
Excellent. They're moving into, you've got the Xbox, of course, which is a bigger, increasingly significant part of Microsoft's business. And they're positioning themselves for the metaverse. And the metaverse is something we all need to get to know more and more about. I'd suggest when you travel next time, because it's very hard to get the headsets here in South Africa. But when you travel, go into a Dixon's and you can pick up a headset for £300 and just start learning what this thing is, because it's going to be big. It's not going to be big. It is big. In fact, today the Shift newsletter was sent out today has a whole big story about the metaverse, which is interesting. So it's like, remember when the internet started, when I first got exposed to the internet, it was already a couple of years old. That was in 96. And at that stage, when I went all in onto the internet, I had many colleagues who were bemused by that decision. And maybe with hindsight, the timing was a bit early. And it could be the case as well with the metaverse. But to try and time these things is very, very difficult, especially in the kind of world that we're in now, where things operate so much quicker, where markets crash so much faster and then recover so much quicker as well. So it's in the old days, you'd have a market crash and then a recovery, which would happen over years. Nowadays, it seems to be compressed into months. So how long is it going to take for people to kind of click to the metaverse and for the metaverse to become the next big thing in the way that quite a few people think it will? Why take a chance and miss out on the opportunity?
Thanks, Alec. Paul just wants to ask, he says, what is your outlook for the JSE? Are there any local shares that have taken your interest? It just seems hard to know where it's going at the moment.
Problem with the JSE is that it reflects South Africa Inc. And South Africa Inc. is embattled. Traveling, it really opens your eyes, as it always does. But when I got off the plane in London, the first thing that hit me was that not a single person was wearing a mask. And the reason for that is that the British have taken a view that they need to get back to business. When you walk around London, we were staying in the Gardeners Hotel. Adrian and Paul Gardner. Paul's the general manager. He looks after it as part of the portfolio. Adrian Gardner, a very well-known entrepreneur here in South Africa, and they own a hotel there called the Draycott. And the Draycott is near Sloane Square, which is in the western part of London. Admittedly, the Chelsea Flowers show was on towards the end of the week, but the London streets around Sloane Square are like what you would see when a sports stadium, when people leave a sports stadium. It was that packed. And Clive and I then went off to Oxford Street and Regent Street, and they packed. These are the shopping meccas. Similarly, lots and lots of people. In fact, they're back to normal. They're back to business. And the other thing that you see in London that strikes you are the number of cranes. And there are cranes everywhere in London. People building, people fixing, people investing. When you look at South Africa, and it was a similar story, by the way, in Zurich and Switzerland, where there were no masks, people were back to normal. They were far more pragmatic about COVID. They've moved quicker on COVID, and they've said, we need to get the economy growing again. When I say there are no masks, there are there's the occasional person who wears a mask, but it's usually somebody who's, I guess, in a vulnerable group, and they don't by any means make up the majority, the vast, vast majority of people in those two countries anyway. I haven't seen the rest of Europe, or have moved on. And the same with Switzerland, though. You see cranes all over the place. People are going about their business. I come home, and I don't know if there's a single crane in Johannesburg. Well, if there is, it's very well hidden. And it's almost like we still haven't woken up to the fact that COVID's over. We need to move on. I read a stat somewhere that 98% of South Africans have either had COVID or been vaccinated against it. And yet we still have this idea that, we'll get back into doing business again at some point in future. So I don't know. I sometimes wonder whether we haven't just regressed further from the competitive economies in the world. The normal South Africans, ordinary South Africans, are clicking to something which is very interesting, and I'm seeing this increasingly, where because of the internet connectivity, South Africans can work for offshore operations and are earning hard currencies in lieu of rands, and that, of course, is making the skills shortage even worse, which will affect South African companies even more. So, we're not in a great space at the moment as a country as a whole, and the JSE reflects this. Of course, where the good news is in South Africa is that Russia's invasion of Ukraine, and I got a lot of this in Davos, Russia's invasion of Ukraine means that the Russians are going to be subject to sanctions for years and years to come. And much of what Russia has been producing and exporting is now available from South Africa. So if we could get Transnet sorted out, coal, which is already our biggest export earner, could add enormous amounts of income to this economy and hopefully be properly used, and hopefully we'll invest into the future and get away from the really, really stupid policies which have just taken us backwards and backwards. And that's the other thing. When you travel and when you start analyzing how the world views things nowadays, I was in a private session with the managing director of the International Monetary Fund, and I can't tell you what she was telling us, as it was in a kind of a global media leaders session. I can't tell you because it was off the record. But one of the things that came through very strongly in that is the time for political correctness is over. This is the time for actually getting back to reality. And that was the message that came from the IMF. So it kind of gets you to get your feet back on the ground and to realize that the real world issues are what counts and what matters, especially when you're in the investing arena.
Thanks, Alec.
Long answer, but I worry that we're still in fantasy land, in dreamland here in South Africa in so many ways. Who knows? After 2024, when we get a new government, I'm sure things are going to change dramatically. But for the moment, it's fighting within the ANC. It's idealistic policies that they think the voters want, and the unemployment rate keeps rising. Just madness.
You watch the Champions League final from South Africa, and you see this sold-out stadiums. There's illegal ticket sales. There's too many people. Where here you've got an industry that's 25%. That's how full stadiums are allowed, Alex. It's continuous own goals, which fuel unemployment, etc., etc. So it's just a spiral, unfortunately.
Think of the Transnet own goal. The Transnet own goal is horrific. We are trucking coal, Stu. How insane is that? You're trucking coal from Mpumalanga, putting it into trucks, taking it on the highways to Richards Bay. And there are long queues, thousands and thousands of trucks. We could sell much more coal than we can physically get to the port at the moment. And Richards Bay Coal Terminal is running at about half its capacity because the trucks can't deliver as much coal as Transnet can. And Transnet is part of the development state. So as long as we are invested in this development state myth, we will continue to grow unemployment, and the Johannesburg Stock Exchange will continue to be a place of, I don't know, maybe for traders, maybe the place that you go and punt when the share prices have gone down too much. And I can't do that. I'm not a punter. I can't trade. What I can do, what I believe, or what my reading has taught me, is that you invest, you buy stuff when you see a brighter future into the future. A brighter future into the future. I mean, that sounds like a Yogi Berra, doesn't it? But you know what I'm getting at. When you see tomorrow is going to be brighter than today. And right now in South Africa, it's hard to find that.
Yep. Alec, here's a nice one to end. I see we've almost hit the hour mark. Paul says, so when will we see BizNews shares available in the Shift portfolio?
Thanks, Paul. No comment. No, I'm kidding. Paul, we're a developing company. We are not quite 9 years old. We're a media business. Media businesses take time. We are in the investing stage. We are growing now, growing our base. We're very, very excited, hey Stu, about the future. I mean, I don't think I've never been this excited about a business as I am right now about BizNews. It's just amazing. It's exciting, and thanks to the support of our community. Our tribe is growing all the time, and we will do better, and we will improve our service, and we will continue keeping you at the center of our universe. And if we keep doing that, and we keep serving you better, and we keep improving the quality of the product that we give you, then who knows? Maybe we'll list on a stock market one day. Cape Town Stock Exchange is keen to to get developing companies to go there. I don't know if we can get that in the shift portfolio. They're going to have to do a deal with the Cape Town Stock Exchange though first. But anyway, there's no plans along those lines, Paul. Thanks for giving me the idea though.
Excellent. Thanks a lot, Alec. It is 1 o'clock, so I think we can leave it there. Thanks again for your time as always. A very insightful and informative hour. Definitely in my book.
Yeah. Indeed, and thanks very much for being with us. We had a substantial audience today. Of course, if you're watching this as a recording, the intention of this is really to be a guide. Every month we come back, we look at the stocks, we look at the portfolio. When there's been something that has changed fundamentally in a company, we'll address it. And from time to time, we will add new stocks into the portfolio, as we've done with Palantir and Meta. I'm very excited about both of them. But also, please, I urge you, it's a long-term. All of the stocks in this portfolio are a 5-year horizon. So don't think you can trade them and trade anything that I have in the portfolio and make a return out of it, because I can't do it. And that's really not the intention of it. But thanks again. And we're back again next month. Hey, Stu, we're not going to do 2 in a month again for quite a long time, I hope.
No, we won't, Alec. I'm promising a bit more lead time, and I promise there will be more lead time on the next portfolio webinar.
Okay, thanks again. Cheers for now. Thank you for joining us for this webinar, which is compiled and produced by the team at biznews.com. A recording of this webinar will be available later today on the biznews.com channel on YouTube. From our team, until the next time, cheerio.